Yo, what's up, everybody? Good morning. April 18th, 2023. Killer day. Market's moving up higher. Some good bank earnings this morning. And short squeeze is still taking off. We've been right. We've been saying it. We nailed it. Can't wait to see how the rest of the day plays out. We'll see you in just a second. We're live on Spaces as well, if you guys want to tune in there. All right, we're getting ready to do this. Good morning, guys. Smash that like button while you get ready to get going here. Running a little late, so I gotta throw this all together really quick. The earnings this morning: Bank of America, Johnson & Johnson, Lockheed, Goldman, everything came in good. We said this. We said they were going to trim the fat. We said everybody's going to look great on the bottom line. The market's going to squeeze shorts into this earnings season. Next earnings season is going to be garbage. Boy, we've called this play-by-play. We've been right about almost every pivot in this market for the last 2 years, haven't we? Rockets, your team, best trading team on the planet, hands down. It's going to come back hard during the day. Possibly. We'll have to see what we got going on, right? I mean, things are just looking great. We have Tesla tomorrow, IBM tomorrow. We have some pretty big earnings coming up. So the market's very scared. We were talking about how these calls are pressed so hard in the money that the market's not going to pull back. And we were right. We were right. All of us were right. And I don't think it's going to pull back. I don't think it's going to do anything other than continue to price in expectations for earnings, which I think every single pullback, if today's the day it turns around and sells off, we have a really nasty red day. We'll see it right out the door, some red lights on these hedge pressure breaks or anything. And then that'll be great. And tomorrow we'll continue the trend probably back up. So I'm excited to see how that's going to turn out. All right. We can look at these markets. Rational. Today is the last trading day of this VIX contract. We roll over to the next one overnight to the Wednesday morning. Wednesday morning's expiration, VIX monthly options. So we have that new triple B point coming through. Remember, we talk about triple B, and if you guys do not go through our courses, you are absolutely missing out. This line, anytime you dip below this line, we calculate it once a month. The market, without a catalyst, the VIX just tends to decay into close. The market rapidly goes bullish. We said this about 3 Mondays ago. This is all the evidence in the world. You put this with the commitment of traders, putting it all together. This paints a picture of the market not crashing. That triple B paints a picture of the market having no volatility. I mean, it's all there. Monthly maps on Rocket Scooter are showing an increased bullishness for the course of the week through earnings. I mean, everything's pointing up. DD's been the upper 8s, 9s. I mean, we have all the right. I've been watching people try to fade this unsuccessfully. I've been throwing longs at this and finding it very hard to even lose money. Longing. It's why it's so obvious. Hold on.
Hi, this is Scarlett Horton. You may remember me from the morning news.
get a quick read on this. I'll let some of my colleagues talk. We'll come through with the opening numbers in just a second. All right, guys, let's take a look at what we got. Let's run this monthly mode here, coming through here. All right, we are already out the door as a bear short up of the S&P. Let me read this really quick. Yeah, and I'm interested to see how the market responds today with Tesla earnings tomorrow. So with things pushing up today, this could be one of those days where it resets to mean pretty hard, as we're going to be moving into some of the mega cap earnings, and I'm curious to see people's response to this gap up today. But Rocky Suitor numbers coming out. We have a bull long up on SPY, 414.5. Again, supporting right there at half gap. The resiliences are both really strong. Let me give that a minute or two for those to settle out. Resilience shows one of our indications is arbitrage on the SPY on the gap fill. So essentially, if the market gaps up like it does, a positive resilience tends to state that the gap is likely not to fill. And so it's pretty positive now, being at 45 respectively, NASDAQ, and about 40 on S&P. That's a percent of market cap flux across the gap. So that looks good. Nice and bullish. The DD numbers will come in pretty soon. So market's going to pull back and likely hit these hedge pressure supports. I'm willing to have like a V-shaped long back to the opening price. NASDAQ 320 support on hedge pressure, right back up to 321. So everything's looking the same. The bull long up across the board. IWM, we are looking at a hedge break to the ups, to the downside possibly. So be very cautious here. 179. If the Russell pulls back, or the S&P pulls back, or the NASDAQ pulls back, any one of those break through their hedge pressures, all three of them are at risk. So we watch all three of them simultaneously, and RocketScoop has alerts on the bottom right of the platform. So just keep your eye on the Russell at 179, because it's the closest one to losing its level. So that hedge pressure we tend to expect to support, and if it doesn't, it's just an early warning sign. So NASDAQ challenging 179, IWM challenging 179 right now is pretty much it. And speaking of Tesla, I'm gonna just kind of run that in a little bit and see how the market is pressing against that. It has a 190 hedge pressure, monthly hedge pressure. It's a BSD, so really when you look at those, they have that resistance up there at 190, and it's just kind of sitting in the bull zone. So I think that today, with the way things are looking, it's going to be really hard to make a determination for any of these stocks like Tesla, because there's not really a pivot point for it to act against. So I think that I'm going to be very cautious taking any longs today, only off of hedge pressure and only quick scalps to get in and get out. So I don't think we're going to have a breakout day today from here further, but I do think that the market's going to probably V up, and then from that point determine if it's going to sell off or not. You guys looking at any trades at the open? Are y'all going to try to take some longs, or y'all trying to short this? AJ, what's up? Triple B is so great. I'm on Spaces right now. I'm trying to like slam my coffee real quick. Google and illiquidity pockets today. Curious to see if you guys don't mind smashing that like button here. We might pull back because of Google. There's some other big market cap pulling back, so. Oh yeah, I like that. Yeah, I think we're gonna pull down, guys, for a little bit. I might take that V-shaped long off a hedge, but only that little long, very quickly. Yeah, it does shift a little bit throughout the day as stocks leave the bull zones and move to the bear zones. Something like 90, it would be almost impossible for it to go below 50. I mean, I would take a massive, massive catalyst to see such a shift. So this is going to maintain probably bullish just all day. yeah, that could be it. Yeah, I know, right? Yeah, that tends to be, the curveball that's thrown. I would keep an eye out today. I have on our scanner, we have something called illiquidity pocket, and that's actually finds runners that are moving between bear and bull zones that are inverted. It's a special case where the market tends to move very rapidly, or stocks tend to move very, very rapidly. And right out the door, Google is one that popped up inside the illiquidity pocket. So Google has a 105 support at hedge pressure and monthly hedge, and is in an illiquidity pocket. So with Google being so heavily weighted in these indices, it's likely to pull back. Like we gapped up a little bit, but it's now trading lower. So I think with the ability for Google to fall about 1 point, that's going to support pulling all three of the indices down to those hedge pressures. So I'd keep an eye on Google and some of these ones that are on the edge. Etsy just popped up on our scanner as well. The scanner and Microsoft now just finally hit the scanner too. So illiquidity pockets are, like I said, there are areas where the market's going to run very rapidly, and Microsoft having a monthly hedge pressure break does show that's possible. And 285 is the next support in Microsoft. So with Microsoft and Google probably pulling back, we might see the market coming down a little bit faster than we expected. So that's, I think, that explains those red candles. Don't keep an eyeball on this. I'm going to let things pull back to these support zones. I usually start off my day looking at the illiquidity pockets just to see what the runners are. Do my cats like to sit on Roombas? One of my cats likes to smell the Roomba. The other one likes to climb on it and then turns it on, then scares himself shitless and runs away. That's how that... Does yours like to sit on the Roomba? I'm going to wait on this one. Okay. Yep. QQQ pulling. SPY pulling. Yeah. Yeah. You keep an eyeball on the resiliences today. I went IDM hedge. IWM hedge break, so this is probably a rational day for this. Oh yeah, today might be one of those days where everything reverts to mean. I think I'm feeling it right now, especially with other things popping up on this on the illiquidity pocket scanner. There's just getting some velocity to the downside. Resilience is getting hit pretty hard just from Google and Microsoft alone. It's fallen close to zero now. Oh, illiquidity pocket. So this is where, it's a liquidity pocket is where you have bull and bear zone and the space between them. It's not bullish or bearish, and the bull zone's on top. It's where everybody's equally squeezed, right? And so everybody's losing it to the house. An illiquidity pocket's the other way around. It's when bull zone and bear zone, the space between them, but the bear zone's on top. So the bulls are winning and the bears are winning to the house. It's one of those interesting phenomenons, and dealers hate those types of arrangements because everyone's winning. So they got to scrape one side really quick, and so the price tends to fly from one side to the other in particular stocks. I usually open the market with illiquidity pocket on the scanner. If you go to the bottom left, AJ, you can pop it on there. It's one of the, you just hit the add button and you'll see it. And basically anything in illiquidity pockets is going to be real finicky, real sensitive. It's not going to have any liquidity, so any order is going to just kick it around all over the place like a tornado. And so when you see things break hedge pressures and jump into illiquidity pockets, they tend to be what I like to call my runners. So an example, Google gapped up and now fell to its close price and now it's trading lower. You see how rapidly Google moved on the open? Just huge candles, right? That's what happens. And so those are like your early warning signs. And I try to look for things like big tech, Tesla, or or something that's big and relative to the news, like we're talking about now, consumer staples or discretionary companies, anything like the Walmarts and the Costco's having that kind of ability as well to just show, the market sentiment. So, clearly, if it's very illiquid, then it's a different story. If it was liquid the other day, so you kind of think about that. That's how I look at it in the mornings. I'm a little convinced with these hedge pressure breaks on Microsoft. Right, guys? Yep. Oh, I feel a little kind of icky on this one. Plus QQQ running up and tapping the upper DD band. This is already completing the trade. Anytime I see this, I don't necessarily get too excited about taking a long. I mean, I would exhaust my long at the upper DD band anyways. That's a great point. And also noting that NASDAQ of the three futures, and because we look at all the indices, but we look at the future side as well. And those upper, this another technique we teach called DD band. It shows stability in futures markets overnight. And you'll see NASDAQ is the one that went all the way up and completed that tap overnight. So NASDAQ is the of the three, the one that moved the farthest already. And with Microsoft and Google breaking hedges and dropping lower, possibly being NASDAQ the higher of the three indices, it does show that there's a particular risk of a pullback. That NASDAQ resilience is right at 0 right now. So I would be very cautious myself longing from here, to be honest, today. Unless I see that resilience number show some stability. And Microsoft and others, and Microsoft and Google and others in the NASDAQ do hold those levels. So I'm not taking any entries yet. I'm just trying to see if I can't get anything lined up. DD being so high, that ratio, 95, I mean, it just shows that the market's going to sustain this bull run. You got calls that were sold for the last month. People were betting against all the... People were short and buying calls. It's a typical hedge you do in a bear market. And those calls were squeezed because we laid off all this non-essential employment and nobody was selling. There's actually buyers in the commitment of traders. You guys see that, right? Last 3 weeks, there's a net long of buyers. So, or buyers are more net long. So those calls that were sold to those shorts, right? Those shorts that were hedging are all way in the money. That's what that DD ratio is telling you. That's what our technique does. 95% of market cap in the S&P is in a bull zone, which means the S&P is going to love its own bull zones. And that's a really strong number. Anything above half is strong. So the fact that it's, riding 85, 90% back and forth, I mean, that's great. So I have no lack of confidence this market's not going to collapse on itself anytime soon. I think we're rallying for the next 2-3 months, to be honest. As long as you come through with another solid VIX month like we did, we can see 4,600 S&P before it turns around. I don't think I'm perma bull here. I'm very bearish this market. But what's good about Rocket Secure is we time things the right way. I'm bullish for the next quarter. Absolutely bullish next quarter. Everyone in Wall Street is bullish the next quarter. Next quarter, I'm forecasting earnings are going to be pretty garbage, and I think everyone else here understands why. And so I think we ride up pretty high, and we almost try to double top the market before it does turn around and start selling over the next year. I think it's going to be really bad as we enter quarter 2, quarter 3, and all these secondary effects due to Fed activity, quantitative tightening, and the employment situation, right? We're kind of having a problem. And some of these reports coming through last week are showing really bad future projecting, or like, similar to when you look at earnings, you look at forward guidance, but future projecting business logistics, like new orders are down. They're way down. It's like the lowest we've seen them in many years. So it just shows that companies are about to stall out, not hit production growth really easily. And with unemployment going up as well and them laying people off, it's just a slowdown you're going to see. There's not going to be a really strong bull market. I think we're all on the same page there. It's just timing when this bear market turns its head and starts trading down again. And I think what Rocky here looks at the mechanics of the market. Most people on this panel, I think, see the same thing. We're up for a month or two, maybe 3, and then time to look at it again from from bear goggles. So that's my stance overall. Are you hearing my cat in the background? Oh my gosh. See, we have 2 cats. One of them is so super needy, and all he does is sit there and cry and cry and cry for you to open the door and let him in. And then when you do, he stops crying and starts messing up my green screen. So, so I'm kind of like stuck between a rock and a hard place. You also could be hearing things too, but... Well, Nicole's sitting right here, so I don't think we have any hidden animals or beasts or anything that other than that cat. So that's it. We have 2 kittens. Actually, the funny thing is we got 2 cats. We went to adopt a cat, and we both liked the different cat, so we both adopted a cat. And the funny thing was, I adopted a cat that reminds me of her. She adopted a cat that reminds her of me, and that's kind of the joke of the family. So one of them just kind of runs off and does its own thing, and doesn't really like to hang out and play. And one of them's hyper needy. You can guess which one the hyper needy person is. She's over there smiling when I say this. I would say I agree with you, Gav. We are bullish at the moment. The warning sign right out the door is this Nasdaq resilience being less than 0 now. So this is kind of giving me a little bit of scare on the market. I don't want to long. I don't like to long into these kind of opens unless I have really, like, when you gap up. I like to long up a half gap as long as resiliences look great. That's my opening move for that trick. With Nasdaq pulling back a little bit, like we were talking about earlier with Microsoft and Google, it could be an invitation for us to pull back the hedge pressure. So I only like to long off of something to something. I don't see green candles, and I don't have an addictive personality that feels like I'm gonna miss out and I gotta jump in and long it. So right now I am patiently waiting for hedge pressures to interact. And with Nasdaq resilience being negative, it looks like it's coming. What's up, Adam? I'd rather take that long up a hedge, guys. I'm really not seeing anything just yet. Let's turn a monthly map on SPY and check it out. I love this feature so much. These monthly maps are just so good. Maintaining bullishness. Bear side is going to... Oh, God, look at this. Look at the next 2 weeks, guys. Yeah, I think we're going to pull back. Keep an eye on this Nasdaq resilience as I do in hedge break. So what I think we're going to pull back, I'd be willing to take a long off a hedge pressure, but only a small V shape to get out. It's not to rally. I'm going to be very cautious on that one too, because look, Nasdaq's hitting its really strong resistance at the upper DD band anyway. So it would be like wherever we fall, back up to there, or back up to somewhere. And today might be one of those pullback days, so be very careful, guys. We have a little bit of sector discrepancy there. Volatility in the middle of May or the beginning of May clearly is the Fed, right? The Fed announcement. And there's going to be a period of volatility all the way up until expiration in May as well. So May is going to be a very volatile month coming forward. And you can see that right around the end of May, the bear side starts to strengthen and the bull side starts to weaken. So in reality, I'm not just making up the numbers when I say I'm looking for like 1 more or 2 more month of rally. I'm looking at monthly map. It's giving me the answer. I'm just mirroring what Wall Street's positions are. I'm not making anything up. People are bullish there. Well, these are billions, if not more, worth of positions in these places. People are betting that that's going to happen. And so we're able to extract that from the market. So seeing that there's going to be probably a bull month or two before the market turns around and starts accepting its bearishness again is all from one graph called monthly maps. Our brand new feature, and you guys are welcome to check it out. Even our extended trial, Ash and I are giving you access to it. So it's a pretty cool thing. Oh yeah, dude, we got some nice bullish. So I'm gonna let this pull back today. I'm not gonna take a long here off of this. Hedge pressure break, Nasdaq resilience negative. I need to long off of something. My question is, do I want to long up a hedge pressure or not? What do you guys think? It's auto drawing monthly maps now. It's freaking sweet. I know, David. We finally got that thing put out there. You guys go. If y'all want to do something, let me tell you something. I'm gonna be a little honest with y'all. This last couple of weeks was kind of like hell week. Rocket Scooter. Hell couple of weeks. We had a glitch, as many of you may know, that decided to cancel everybody. Not everybody, but cancel people over like a 3-day period. It was just implementation of something new. And so we had this like, you know, we got everybody back in. The last 7 people we got back in today. It was a massive catastrophe. Well, Jod and our development team are working night and day. I'm going to tell you something, night and day for you guys to get everyone back in. We had no complaints. Everyone was happy at the end of the day. I want all of you to go and chat. Do me a favor. Go into market chat at Jod and say something really nice. This guy went above and beyond for all of y'all while putting the monthly maps out at the same time, doing 2-3 jobs at once. So everyone go give him some love. This guy has been literally killing himself, not literally, figuratively, to get everyone back in. It was a huge thing. AMJAD. That's our head of development. Right? Give him some love, because he has been like put out monthly maps. We're troubleshooting that. He's migrating our servers over, and all of a sudden I'm like, oh hey, we have a fire on our hands. Can you help? Went above and beyond, reaching out, emailing people, making sure everyone had their stuff. I mean, this guy killed it. Deserves some love. He's the head of development at Rocket Scooter. He manages all of our development team. Just be like, dude, thanks for all you did, and you know, I like to always pass some love and appreciation over to our hardworking team, because you know they're not customer facing all the time. So you know, imagine it as being a programmer, you make this really cool tool. It kind of feel cool for you to know how much people enjoy and appreciate your work. You know what I mean? So if you guys toss some love out that way, it'd be kind of cool. I think that was a good analysis to take a look at. Yeah, that you can see this with, we were talking about this earlier. This, you know, Google showing up in this illiquidity pocket and these breaks, and Microsoft as well. just we're showing a little bit of that downside potential, and the Nasdaq hit that upper resistance and just started pulling back a little bit. I'm still not super bearish, but yeah, you nailed it. I think these are going to be maybe reverting to mean leading up into tech earnings. So I'm actually expecting a little bit more of a drawback this morning in all three indices as well. Let's do a monthly map on the Russell. Do you guys like monthly maps though? This is like monthly map is baller. This is like, to me, one of the best things I've ever made. Oh yeah, great question. So the open price is the 9:30 open. And the close price is the previous 4 p.m. close. The half gap is the halfway point between the two. It's a very simple calculation. Yep. So since the large buffer of order flow at the close and open the day from the MOC and MOO orders really make half gap one of the strongest pivots other than the open close. Since you trade gaps paper, you understand how important it is. And this is for the audience. You know, gaps and open and close prices are your strongest pivots of the day usually. Those are always strong pivots. And so what we try to do with our half gap when we talk about this is that when the index gaps up, right, you have this space between the open and close or gaps down called the redistribution zone. It's where those large positions that the imbalances between the 2 days are redistributed back to the market. So the short is exited and long is exited from the dealers if it can happen. And so we have a tool called resilience, which does the same thing, but it aggregates all the stocks in the index across their gaps. And if resilience, and there's a little bit extra math in there, but resilience shows that the SPY is trading kind of off kilter from what the aggregate of the stock should be doing. So an example is if all the stocks gap down and the SPY gap down, and all the stocks pass through their half gap and were going to fill their gap to the upside, and SPY hadn't moved yet, resilience recognizes that arbitrage, and then the SPY would snap into place. I'm still waiting to see if I'm going to do anything on hedge in a second. I'm glad I'm sitting out on this one, yeah. Because the resilience is still positive, though. Yeah, nice job on that, AJ. It's really awesome trade there. I'm just sitting back watching, so I'm glad you're making some money.
Yeah, me too. I usually watch stuff like this, but like your analysis was spot on. Right? You caught the illiquidity about the Apple, so thank you for that. So
yeah.
That gave me the conviction.
Oh, hold on. Let me put this really quick here.
I'm up not 10%, 15. I'm up half a position. That's really it, gentlemen. Just for your conviction.
Yeah, dude. Awesome, man.
Right, by the way, we called this literally 5 minutes ago, but 414.5. Just saying, like, we just magnetized to that. That was given right at the open.
Oh yeah, Q puts are printing now, gentlemen. That's a nice candle. I always take the IBC.
I mean, everything does look interesting. Okay, so resilience has just dropped 0. So let me. Yeah, I'm glad I'm sitting out on this one. Nice job, buddy. So this is a very important thing because this is going to answer paper trades question. Paper gains question. Right now, what we're seeing is the exact interaction at half gap. And so SPY has run to its half gap and is sitting there, paper. But now these resilience numbers are negative. Okay. So with the resilience numbers being negative and the SPY being in the upper end of its redistribution zone, it implies that the SPY is going to trade lower to fill its gap. I think Ashton's raising his hand. Are you going to comment on that? Okay. Well, do you guys know if you ever get on the horn with Rox or customer service, you can talk to me on the phone.
I would say, like, if you guys feel like I had like basically 415 on my half gap.
Yeah, I'm not doing anything, guys. I'm just chilling.
I'll typically wait for a little bit longer of opening range break. But I will say, like, so for me, I'll look at certain things. Like,
so do you guys see that half gap, the gap is going to fill? because resilience is negative. So this is going to trade lower, and you can see it's going to break hedge pressure on the way down if that happens. This is forecasting a hedge pressure break. We're following the 413 today. Do you guys see how the cascade happens? So that's a great way to trade. I mean, if you trade opening gap mechanics, and if you hear anybody that's teaching or trading and they trade gaps and gap mechanics, it's very professional to do that. Everyone that understands that those are very important pivots really understands how markets move. So I commend you, Paper, for being very like astute on the topic, because this is very important to see. The biggest volume flux of the day is always the closing volume, and so the gapping has everything to do with that closing and opening volume of the next day. So that's where the bulk of Wall Street's revealing their hand outside of dark pools, so the part that's revealed to the market. And so this is an example today. We're going to pull back to 413. I'm going to walk you guys through my analysis here. So in the redistribution zone, if you look at Rocket Scooter, I don't know if you have an account, Paper, but I'll show you around sometime. SPY gapped up, and we're sitting inside of the redistribution zone. Redistribution zone is between the open and close, and SPY is now sitting at its half gap. Resilience for SPY is now negative. It shows that the flux of market cap in the SPY stocks, or the S&P stocks, is filling their gaps to the downside, which means SPY will likely catch up, right? The S&P tracks the sum of the stocks. And so the resilience is one of the best tools. It's my favorite tool we have. I call it our Swiss Army knife. It's telling me right now that SPY wants to fill its gap to the downside, which means if you guys are looking at Rocket Scooter on SPY, it has to break hedge pressure to get there, which means resilience is forecasting a hedge pressure break, which means we're going to get some velocity to the downside, which means AJ's puts are probably going to make even more money, and we're probably going to support at the bull zone because DD is still bullish. So right now I'm forecasting a fall to 413 on SPY from the cascaded snowball of that effect. But the resiliences are showing arbitrage between the index and the aggregate of the stocks, Paper. So what's the neat thing is whatever you're trading, if it's an index product, resilience is your tiebreaker at half gap. So they're both negative, and SPY bouncing in its half gap, it hints that it's going to fill its gap to the downside. Our group calls it the gap fill predictor, and it's for the most part not really ever wrong. So it's because S&P tracks the stocks, and it always tracks the stocks until it doesn't slightly, but at some point they always catch up throughout the day. So in the times that there's a trade opportunity, they call it arbitrage, you notice there's a discrepancy. And right now, as I'm talking, SPY is walking through hedge pressure. Like literally, I just play-by-played it 3 steps ahead. So using that aggregate is such a cool tool because it is a leading indicator. And as we've been saying for the last, AJ and others have been trying to short, even though it's a bull signal, resilience is one of those flags that can tell you while we do have a bull. And Gob mentioned, we magnetized at 414.5 on SPY, walked right to it. Now resilience is telling me it's going to keep going lower. So we're ahead of that instead of watching price action. We're forecasting price action with these techniques. So those of you listening, feel free to come to the stream if you want to see it. It's probably better to see it than just hear it. Dude, it's such an easy day today, right? You loving it, Green? Oh yeah. SPY resilience forecast. I have a video called "Resilience Predicts Hedge Pressure Breaks." Now all 3 irrational signs are there, and see that. Dude, I'm turning this down a little bit. Look at that. Look at that. I mean, I don't know if... I mean... What up, y'all? Okay. Yeah, we're trying to. Evan was asking me about something up here, so I was double checking.
Goldman so I guess they're still trying to get out of this site. Look into the details.
Let's go ahead and look at Goldman Sachs. Actually, we had some good earnings today. This is everything's looking somewhat stable. These resiliences are forecasting hedge pressure break. DD usually wins in this aspect, so I'll probably be taking a long. This is irrational trading right here. So anytime at irrational, I trade small. And with DD being greater than half, I do bet that the bull zone still holds. So doesn't mean that I'm going to long for a reversal, but I'll tell you in this kind of setup, we teach you when irrational, no trades, number one. Number two is when resilience goes negative, which it did, it predicts that the S&P is going to fill its gap, which it did. That caused hedge pressure to break on the way down. As long as resiliences are negative, we're likely to fight here and trade lower. With DD being greater than half, we're likely to support here. And when we start trading through here, if resilience is still negative, I trade it from there to there. So there is a tiny scalp potential against a big sell-off today in just that box that I'm probably going to take. With a contract, with nothing risk. Just if I want to grab scalp. Do y'all see how that works? So I'm basically, from right here, where my mouse is circling, does everybody see right here? I'm now 1, 2, 3, 4 steps ahead of what I think is going to happen today, and I'm trading steps 3 to 4. So part of when you're day trading appropriately, like I'm trying to train you on, you're thinking about the market many steps ahead, and now you just wait for what you want. And today I didn't open out the door because I only trade from something to something. I would have longed on that SPY. However, we're right at DD band on NASDAQ. That's the end of the run anyways. We're too close to that for me to see a particular run, which exactly I said we would not likely move higher than that. And then that caused the market to have some resistances. We looked at the illiquidity pockets to get a heads up on Microsoft and Google. Now everybody on Twitter is starting to talk about Microsoft and Google. We're right at the open. Our illiquidity pocket scanner finds it right out the door. Isn't that crazy? And so now you can see the exact chain reaction. Pretty cool, right? Sometimes I mute, like if the cat's meowing or if Nicole starts whispering sweet, lovely things to me. She just rolls her eyes. Or I'm on the spaces, pretty much. I do it so you don't get feedback. Yeah, so bull zone support is what I'm looking for. Why do you think it will fall below the call wall and then reclaim? Well, because of volatility. If it continues to fall, that's just anticipating. It could bounce off the call wall. I take my first entry at the call wall. Here. And here. Let me stop there. Just because when things fall, volatility creates a problem. So things don't just like plunge and V. Now that's the optimal condition, but I usually expect it to like fight a little bit. What up, you guys? You're not going to trade today? Yeah, I know, right? I feel like by the time it gets there, it's going to be like middle of the day, and I probably be rather playing some Halo or something. Everybody, don't forget. Did y'all do your taxes? Don't forget. Just thinking about that. Helping everyone remember. One thing that I do like is that this market, and the one thing you'll see that correlates pretty well, is we look at VIX futures as one of our telltale signs of the way market's going to behave for a month period. And on the Tuesday, let's say this right, the Tuesday before the third Wednesday of the month. It's not always the third Tuesday. If the month starts on a Wednesday, that would be the second Tuesday. But the Tuesday before the third Wednesday of the month is the day that we do a calculation when VIX futures, like tonight when the Globex closes down for the hour, in between the open and close, that's when I roll over. If you guys are familiar with futures, if you're not familiar with futures, don't worry about what this term means, but it's when I roll over in my VIX contract. And we do a calculation called, we call it triple B. It's just a nickname we gave it. And what that calculation shows is a principle of what's called contango or backwardation in VIX futures. And what this is telling you is that futures price things in the future before they happen. And so when you're looking at VIX futures, it's trying to price in volatility in the future before it happens. So an example would be if next month there's a big Fed meeting, that Fed meeting could affect volatility. Clearly you're going to see people are going to be very, market's going to go all over the place when that meeting comes out. What's a month away? Well, VIX futures will price in that expected volatility at any point. When there's an announcement that says we're going to go to some trade summit and talk embargoes and yada yada in 3 months, well then VIX contract in 3 months will immediately start reflecting that expectation, right? So when that 3 months arrives and the meeting's canceled, well then that VIX contract was overpriced, right? And contracts, just like in futures, just like options, you have different contracts trading in different months. So we exploit that exact process. If you underprice or overprice expected volatility, the market behaves very much so because it's hedged at that like high or low spot. And so every Tuesday before the third Wednesday, we do a calculation that almost sets one of the most important pivots for the month, and it stays there all month. And we're going to do it tonight. So those of you that don't, you want to hear this, the idea that the 4 Mondays ago, we got a telltale sign that the market was going to not be bearish or not be volatile for the month. And do you guys see how every dip has just pulled right back up to mean? That behavior is predicted a month out. And today we're going to give you the new number. What happens when VIX overprices or overexpects volatility that you don't get is that volatility rapidly decays. And what that does is it makes the market, it draws liquidity to the market, which is what we've been seeing. And you've been seeing this market sustain this bullish move or basically non-bearish move for the course of the month. So we're going to get this calculation tonight because we're going to roll over into a new VIX contract. And we do that because when VIX monthly options expire every third Wednesday in the morning. So we do this calculation around that expiration. And it's just a single number that when the VIX futures are below it, the market behaves very liquid. Dips get bought up and markets revert to mean a lot of the time. When you're above it, the markets become more chaotic and volatile because you underprice expected volatility. So this last month, we overpriced volatility. We come into earnings season and all earnings came in super great. I mean, I've been seeing green across the board. I haven't seen a really bad big name report. And so people priced in, the VIX futures were sitting, when we rolled over, it was like 23, 24. Right now, VIX futures are trading at 17. So people expected bad earnings. Futures priced in a month in advance. The market comes up and we're not as bad as we thought. And now this volatility is just collapsing and you see the market rallying. These kind of mechanics are what we like to exploit at Rockets here. It might sound like a lot of technical jargon or futures jargon, but we try and make it pretty easy. Like when we teach people, it's cool to have the deep dive because a lot of people are hungry understanding how stuff works. But we'll just give you the number and then it basically says if you're below that number, volatility is going to completely start to dry up. If you're above that number, trade smaller, things going to be choppier. And so tonight we're going to get it's like the groundhog comes out. Are we going to see our shadow or not? We have a good month ahead of us or not? And with earnings turning out the way that it is, I'm going to be very, very, very shocked if we come out volatile and start selling off from here. If come out with a couple good earnings reports today, tomorrow, next day, around this expiration, we might see another good bullish non-volatile month. So nice little lesson there on that.
Nice rundown there. SS.
Have any idea what might happen to the market when Fed's digital currency goes live? I don't think any of that stuff. I think a lot of that stuff has very little effect on liquidity of the stock market. I think that crypto or digital currencies in general are not really to be treated as currencies because there's a fixed supply. Now, the difference that I like to say with the currency, a central bank can print currency and buy debt with it, and that's what makes it a currency. I always thought crypto assets were commodities. There's a finite supply. You dig them out of the ground, you can stockpile them, and they only have value because they're traded for other commodities and things. They're like gold more than anything, not like a currency. Gold's almost like a commodity with a finite supply. So I think that any digital currency that has a limited cap will trade like a commodity, which means it'll trade independently to the stock market. It'll be hoarded in periods of bearishness, and its complete value is based on trust of it behaving like a currency. If gold has no demand, then it can't be a currency. It's only a currency if there's demand for it to be a currency. A currency is given value by your government, your treasury. So it is given that faith to be a currency backed by the government. A commodity is only a currency if people accept it as a form of trade. So that's exactly what crypto and digital assets are. Does that make sense? When people say crypto is a currency, it makes me want to vomit in my mouth. People need to pick up a fucking economics book. It is a definition of a commodity. So it is tradable. It's tradable for commerce. You can buy things with it. You can also buy things with a gold bar. I bet you I can go up to a grocery store and hand someone a bar of silver to pay for my groceries. Somebody will take that. Right. And not only that, it's a very ununiformly accepted form of a commodity type currency. So not very many people will take it. So it's very illiquid on top of that. Now, if the Fed unleashes a digital currency, I think that's great because I think digital currencies are great for the one reason that it's a currency. It's not a commodity. So a digital currency has nothing at all remotely similar to crypto in the current sense of crypto being an unregulated private enterprise that mines digital commodities out of the ground. The digital currency, if it's adopted by the treasury, if that's the thing that's going to happen, I don't know anything about what you're saying. I'm just guessing. This is what I always tell people. If it's adopted by the treasury, there's going to be zero change in anything. It'll have the same thing. They can print it out of thin air. They can destroy it out of thin air. The only thing that happens is the government can lower its infrastructure. You don't have to have as many people working in mints. You don't have to waste as much money buying paper and metal and all this other stuff. And it'll behave exactly the same way. The only problem with it being a digital currency is that it's susceptible to digital cyber attacks. The only flaw I see in that system reminds me of maybe Fight Club. What happens if they just blow up all the buildings and reset all the currency to zero, right? That's one thing that I'm concerned about being fully digital. But other than that, I don't think it'll have any effect. I think it'll actually be stronger for our currency to have a digital form of currency because you can no longer counterfeit digital currency. So you're going to so the government don't have to stat, like the Secret Service is the branch of the government that deals with counterfeiting. So you don't have to have staff to target that much counterfeiting. I mean, you have digital counterfeiting, I bet, but you don't have to, it costs, I don't know how many hundreds of millions of dollars are spent infrastructure just maintaining mints and machines and repairs and personnel and buying paper and buying coins and that waste in the treasury. The overhead of the government comes down, which means the government has more tax dollars at the end of the year to spend on shit we actually need instead of dollars to put in your pocket, right? So digital currency, I think, is great for the dollar. Very great for the dollar, as a matter of fact. I think it's a very more robust way, a more accurate way to have dollars and go into circulation. Oh, hold on, ask me a question. Government will know everything you buy and do. Government, yeah. Well, that's another thing too, right? The government kind of already knows everything you buy and do anyways, unless you are the one person out of the 200 people watching the stream that buys everything in cash. All of us use a credit card, and all that stuff is subpoenaable by the government in any kind of seizure case anyways. They will find out what you spend your money on. Right now, they're tearing apart Zach Morris's bank records in this court case I'm reading about. Everything you do is traceable, unless you hand somebody a bag of cash in a park. But you have to make sure nobody's closed circuit TV caught you doing that, right? It's almost impossible to escape the government these days, unless you go to the back of a warehouse and leave a suitcase full of money, and then somebody weeks later stumbles in and takes it, right? And either way, it's hard to escape the government radar, the way I think about it. So, yeah. But I honestly think it'll be great for the dollar, and it's great for infrastructure to not have a paper treasury anymore. And really, I mean, the Fed just prints money anyways, and it's better to click a button and print money than and faster to get into circulation. It's a little bit more robust for monetary policy to have that control. If we print money out of thin air, the Fed prints money out of thin air. That's the process of QE. They'll print money and buy treasuries with it, right? So you buy debt from the government, printing money, and then the treasury circulates that money. It's much easier if you just push the button. They kind of push a button already. It's all pretty much digital as it is. Now our currency will just be digital. Here's that bull zone tab. Now the question is, do I want to take it or not? Do I want to touch this? Let me put... Do I want to touch this? Do I want to tap it? Let's look at stuff. It's a trade from here to there. Or am I better just sitting out? Honestly, I think it's too risky. I'm just better sitting out. It's already time for me to chill. Call it a day. So I'm going to not take this. For clarification, it's digital currency and it's being made by the Federal Reserve, and it will set the live. Yeah, so it's digital currency. So I'm just explaining the difference because a lot of people associate digital currency with crypto, which not what you said, but people idiotically. Can you resend that once more? Did you send? What's coming? Oh, good call, good call. So right now, with bull zone support at 413, what I typically do is now I try to find other pivots, right? So with resilience negative, that shows when you're outside of the redistribution zone that the close price is resistance. You guys see that, 414. So even if there's an upward trade, like a scalp, because when you have hedge pressure breaks like this, we teach a rule that says just don't trade unless you're just a maverick. And even if you do, you should not take big risk against a fall of this steepness, especially when you get that gamma squeeze going with it. The bull zone will show support as it's bouncing there right now because of DD. And also what DD says is that by the end of the day, it's going to want to re-interact or at least attempt for the bull zone. So if we lose the bull zone now, it's going to probably fall until that 2 p.m. random run up in the close. But for right now, if I were to long from here, which I decided just a second ago I don't want to, just because even though it's a pretty decent bounce, and I think it will bounce, I would only trade it up to the next resistance. So anytime you're trading irrational markets, the rule is trade to next resistance, get in and get out. The next resistance would be the close price of the SPY. So we would basically return to that pivot at 414. So that's a reward of 1. And my stop loss would typically be 1. So with a 1-to-1 coin flip against a big sell-off, contrarian, it doesn't just sound like it's worth me sitting here for an hour or two to flip a coin up $1,000, down $1,000. And days like this, I just like to sit out. and be glad that I could see it coming a mile away, because we did see it coming a mile away, and it just makes you feel more empowered. And the bigger thing when it comes to trading, we'll teach you guys, because we have a trading boot camp. We will train traders from start to finish on every aspect of this game. Preserving your emotional capital is one of the biggest things. And I think we have a space today, don't we, on trader psychology? I'll actually talk about it in that space. But what basically what it is if I preserve my emotional capital, I come back tomorrow like a 2-day vacation. It's, you know, a lot of people perceive trading as a way to, you know, this is what I want to do for a living, and I'm gonna trade all day long. It's gonna be great. And trading, to me, once you do it for a living, it's like any other job. How great is it for your boss to call you in the morning and say, hey, it's snowing outside, you don't got to come to work. You feel so excited, right? I can take a day off. Like, oh hell yeah, I get a day off from work. I feel the same way. The market looks garbage right now. It doesn't give me a clear sign. All the trades are 1-to-1. They're coin flips. Saw it coming from a mile away. I thought it's gonna fall. It's falling. All these red lights turned on. It's all risky. Okay, well, you know what? I want to take a day off from work. I'm gonna go put the leashes on the cats and take them for a walk or something. I'm gonna go make me some lunch and watch some TV, or just take a day off. Come back tomorrow refreshed, and I'm gonna trade tomorrow without feeling like I got kicked in the stomach if I guessed on the coin flip the wrong way. Preserving emotional capital is the secret. The secret. If you're gonna write something on a sticky note and stick it to your monitor, knowing when to sit out and take it easy is the secret to being a successful investor and day trader. When to avoid a market. If you're always trying to take a stab at a market, you are a gambler. And we teach people how to get rid of those addictive things. I see my buddy New Age down in the listeners down there below. If you want to jump up and have something to say, buddy, bring you up as well.
Yeah, have no age up here. You can join. Yeah, just got it open now for about the next 25 minutes. Just chat, chill, talk whatever's going on in the market. I'm looking through some of the news. I saw what's the Southwest Airlines.
Are conditions when I take the first bounce, or would you wait to see if it truly holds a support? No conditions. The condition is I would long exactly right here to the next resistance, which would be there. Resiliences are negative. This is the next resistance. I would long right here just to there, and I'd probably get out of the way. The only reason I'm not taking it is just because, I mean, this is one of those funded trading accounts. Like, I have to make sure my first trade is my best trade, right? And I'm actually below the starting point because we just had some... I've been doing great in my regular account. Like, I haven't lost a day in a very long time in that account. But I take higher risk. In these funded account things, you can't risk the same. You have to be a little bit more cautious. So for both accounts, they're flat. I don't have a surprise trade going on the other account either. They're both flat. I didn't touch it today. So the bounce here, 413 to 414, it's practically like a 1-to-1. Is it a high probability trade? It kind of is. Another thing to take note of is that, you know, if the market does continue to trade lower, if that DD stays positive, then that 2 p.m. run up could snap us back up to the bull zone. So ideally, I'd like to test that theory today by just watching it and seeing what happens if we get that maybe 3 or 4 point run. Like if the market's trading down past noon, you know, past 1, we get right here, and it's like 2 minutes before 1, and we're down here, and that's 85. I'd be willing to long with a 10-point stop just from where it is at that time to test that theory out. Make it 3 or 4 to 1 in that particular setup. So right now, the answer is, if I wanted to scalp from here, yeah, the idea would be sure. A great way to scalp, not just longing futures directly. One could also sell puts or sell a vertical credit spread in this particular fashion down in the 412, 412 and 410 maybe. Pick strikes like that. It's a bet that DD pushes us to the bull zone, and then capture yourself a credit on the put spread because you're betting that it doesn't go into the bear zone because DD is positive. One of the things Ashton teaches in selling vertical spreads is a very great way to trade. So there's a bunch of ways to trade a bounce like this. I don't want to trade directionally for a 10-point scalp. I think that would be very not worth my time. But what I would do is, again, you can sell all a bunch of stuff with resilience negative. You can sell calls above 416 with DD positive. You can sell puts below 412. So you can establish like an iron condor or something as well. Taking the day as a 3-day alpha. Yeah, that's what I'm talking about. You don't like it? Take the day off. You come back tomorrow with no damage done, full health, ready to go. Tomorrow's another day. Smart, very smart play, dude. Very smart play.
They haven't done that yet. It could be through Periscope, like they have done before, but Spaces would make the most sense to me. But they have.
Let's see what the sectors look like today, just in general. They all look like they're pulling back. This commitment trader still shows a nice bullish, not bullish, a nice liquid market, but non-bearish as well, with the market makers being positive. That's the thing we've been talking about. We're teaching everybody about this commitment traders, and I like that people are taking off learning how important that is. I like that our techniques are starting to become status quo with a lot of these folks in the trading community. There's a lot of people that are learning a lot of new stuff from what the Rockscale community teaches, and I'm very happy to see even other educators run off and start training on this stuff. I've seen random YouTube videos of people talking about the committed traders, quoting the stuff that we created from it. I think it's great seeing everybody out there using newer, more relevant tools to make analysis in the market. So comms and energy are down. Interesting. Wait, this can't be right. That's not. That doesn't look right. There it is. Okay. Maybe this doesn't update in real time. So in the last month, everything is still looking okay. Like in general, energy being the stronger. Financials in the last 5 days, but that's because we've had financial earnings, right? Friday, I think we had some financials, and then today we had some more. Today, financials are actually pulling back a little bit, so everything that's been selling off or rallying is finally selling off, reverting to mean. I think industrials and materials are getting ready, and tech's getting ready for next week. Interesting to see that tech is just barely on the edge. You can see right here that Apple, Microsoft, Apple's up, Microsoft down. That's the reason why Nvidia up. Industrials. Let's look at these. Lockheed was doing really good today. If I remember correctly. Yep, 3%, 3.5%. All right, you guys. Love y'all. Everyone head over to the Discord. If you haven't, make sure you check out the Rocket Scooter Extended Trial, obviously. This is the best thing we have here. Give you a link here. Click this link now. Or the Discord. Click these things. Nothing going on here. ZZZ. Yeah, I know. Boring ass day. I can do much. I'm gonna call it a day. I might actually chill out. I might get online and finish the last chapter of Final Fantasy VII Remake. I don't know. I was playing that. Game's awesome. We got everybody back signed up. Everything looks good. Just a handful more of you I got to troubleshoot, and I think everything's back to normal. I am working on a couple of big things for Rocket Scooter. You guys have no idea. This is the final iteration and dream of the platform. We got futures trading along the way. That's coming. I've got a meeting with a brokerage who's taking interest in Rocket Scooter. A brokerage. Let's talk about a partnership of that magnitude. Number 2, I have a meeting with another massive, substantial A-list group that might join forces with Rocket Scooter. Tens of thousands of people at this point. 2 things going. Where I think we go today? I think that over the course of the day, it does deteriorate further. And being that VIX options expire tomorrow, I really don't want to take a guess on how the volatility plays out. So I think that it's probably going to push and push and push and push and maybe go lower rather than higher. And then ultimately, at the end of the day, it might make a run for 413 to maintain that DD. That's my guess. Send me a DM about some web dev stuff. Yeah, dude, Matt, please do. Send it over. Good luck on the meetings. Yeah, so I got some stuff I got to do today, prep for. And so I got to do that today. It's going to be big. Obviously, it's great. I love seeing the Rocket Scooter family grow. I love seeing you guys support the platform. We're expanding rapidly. We're going to start taking resumes closer towards the summer. As we expand our in-house team further, we're going to have a lot of roles that need to be filled. So if you guys are going to have a career in the financial tech sector, or software, stay tuned to that. I'm not a terrible boss to work for. Yeah, at least I don't think. I'm average. I'm okay. So if you guys are looking for that, we will likely be hiring different roles, different positions. A lot of things: server infrastructure, security, management, customer service relations, digital development, UI, UX. We got everything going on there as we're going to be rapidly expanding. Right now, we're moving into our we're going towards our 4,000th user account. By the end of the summer, we'll be at 10. So we're going to be pushing so hard to grow really rapidly, and we'll see how this goes. And we're going to be, I need a janitor, like Charlie from Always Sunny. Yeah. You can be the janitor at my bar. I'm down. Just don't turn on the close sign when the bar is open, because you think it says Coors. All right, I'm out. Love you guys. Okay, see you in the Discord. We'll actually do have a Zoom call today. We will do it in 1 hour for sure. Zoom call today. We're ready to go. You guys come to the Zoom. It'll be posted in Discord. We'll see you later. Love y'all. Have a good day.